All right, guys and gals, it's about that time of day again here, folks. Time to get back to work. Weekend's over. Time to roll those sleeves up and get back in the action here this week. Last week of the month, too. It's great to have you with me. Time to get back to work Monday evening, February 24th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because I help traders find the best setups using the simple three-step strategy that we teach and trade together every morning in my trade room. But tonight, my job's a little bit different tonight. Tonight, my job is to find the best levels of support and resistance, the best entry setups for tomorrow, and most importantly, my job tonight is to keep us out of trouble, avoiding those traps for tomorrow. That's Tuesday's trading session, and we get a jam-packed video to kick off the newsletter this week here, last week of the month. As you can see in the background, the charts are all prepped up. We get some oil, S&P, Nasdaq, gold, just a little bit to talk about tonight. Lots of pre-market moves, a lot of overnight moves. Overnight moves always tell me to expect one thing the following day. We'll talk about that tonight on the video. I also have to check the calendar for tonight or for tomorrow as well because we get some big news pretty much every day this week. And of course, it's the end of the month. Even though it's a leap year, we still got the end of the month coming right around the corner, and there's some big clues on the calendar. So we'll grab all the charts, we'll get those all ready for tomorrow, we'll get the calendar checked so you know what to be waiting for tomorrow and what to avoid tomorrow. Before we jump in though and put the entire plan together for Tuesday's trading session, I just want to remind you, if you're here for the first time right now, make sure you subscribe to this YouTube channel. I don't want you to miss the good stuff we publish every evening on this video newsletter. And don't forget, if you have any questions about anything we talk about tonight, drop those questions in the comment section below. And as always, if you tune in every evening to catch this video newsletter, if this video newsletter is part of your evening routine like it is for me, hit that thumbs up button for me. I always appreciate you guys supporting the channel, and every time you hit that thumbs up button, it means a lot to me. So thank you so much for tuning in every evening. Hope you had a great weekend. Let's get back to work though. Don't forget, subscribe to the channel. I don't want you to miss this newsletter every evening, Monday through Thursday. Let's get this video going first of all tonight with the economic news calendar here for tomorrow. It's the end of the month. Let's take a look at the schedule here, courtesy of the Econo Day calendar. I'm running a little bit late here tonight, as you can see here, so I will make this relatively short here tonight. But first things first, we know we're going into the end of the month, right? And of course, leap year. Pretty cool, right? Leap year this year. So we got one more day than we normally get in the month of February, but that doesn't mean much for us as traders, unfortunately. I've yet to, I don't recall if I'm sure 4 years ago I probably did trade a leap year. I wasn't paying attention to that dynamic at that time. It'll be interesting to see what a leap year trading session would look like. We don't have that this year. You can see that the last day of the week here is on the 28th. I'll have to think back in time, look back at how the last leap year's price action was. Maybe you remember it, right? Post me some comments in the comment section below, but I'm getting off topic right now. Leap year or not, we are going to last couple days of the month of February. What does that mean to me? Well, anytime we go into the last couple days of the month, you got to expect the markets to get more volatile. Now, obviously, the coronavirus and all the issues that are surrounding that right now is doing a pretty good job by itself at kicking up the dust on this volatility right now. But as we go into the end of, remember, end of the day, end of the week, end of the month, end of the quarter, right, which of course is next month, it'll be really be a powder keg of volatility as we go into the last week of March, right? We're not there yet, but we do expect to get, as we get later in this week, volatility should start to kick up. And I know, right? You might want to take your Dramamine, your seasickness pills, because it's been pretty rocky here so far. But, you know, this is a Monday. We saw this last Monday, right? Big bloodbath on Monday. They worked their way out of that hole by the end of the week. We'll see what happens here this week. But the bottom line is we know we've got a lot of volatility we're already seeing. I would anticipate more of that volatility as we go into the end of the month. Now, you'll notice we've got great market moving, impactful events pretty much all week this week. We got the consumer number tomorrow at 10 o'clock. I shouldn't say that. the Case-Shiller Home Price Index at 9 o'clock to kick us off tomorrow, and the 10 o'clock Consumer Confidence number at 10 o'clock tomorrow. Both of those have potential to really light a fuse underneath these markets. You better be at your desk, though, at that 10 o'clock consumer number tomorrow. You get the Richmond Fed, manufacturing in there as well. So tomorrow, 10 o'clock, is going to be a very important time to be at your desk. Make sure you reschedule any phone calls, right? Keep focused between that 9:30 and 10:45 block tomorrow. We, of course, will be in our trade room tomorrow morning, like we always are, at 8 o'clock Eastern time. So, of course, we'll trade that stuff together tomorrow. But you'll notice, though, that's not the only stuff we have this week. At home sales, inventories on Wednesday, durable goods, and GDP. I see you, GDP, on Thursday. That Thursday is looking ripe for a really, really great trade setups for us on Thursday. GDP and durable goods kick us off, right? Pending home sales, natty gas. That should be a pretty good Thursday. Thursday should be the whole week looks really, really good. And then, of course, we go into the big question mark Friday, end of the month, right? Leap year, whatever this would mean, right? But we know we get a bunch of news on Friday morning, international trade, and finishing up with consumer numbers and PMI. So there is no shortage. The news just keeps coming at us here this week. Tomorrow morning, though, right, is our focus right now. Tomorrow should be a relatively calm day. I think a lot of the whack, right, got done today. And again, it's a Monday, right? If it's a Monday, that means it's a weekend gap right now. We've seen that the last 3 or 4 Mondays. So we know tomorrow is probably going to be a lot calmer than it was today. But with the end of the month coming around the corner, though, we definitely have to be aware of that. 2 big news events for tomorrow. We definitely want to be at our desks and ready to go during that 9 o'clock and 10 o'clock block. Come out and join me, as always, every morning, 8 o'clock Eastern time. I'll put all the links to get registered for tomorrow morning's trade room as a member. I'll put all the links in the description of the YouTube video tonight, right? Also, if you're on the blog, I'll put a big red button for you right below the video tonight, right, to come join us as a member. So don't forget, 8 o'clock Eastern time tomorrow. Looking good. Let's keep this party rolling. We know what the schedule looks like for tomorrow. Now let's find some technical setups that we can make some profit on tomorrow as well. Got some oil, some S&P, some Nasdaq, and some gold. And there's really one common denominator among all of these markets, and that is a big pre-market move. Now, a lot of times what happens is we get these, bullish, the bulls or bears, right? But today a lot was the bears, right? Big moves down in the pre-market, and by the time we get into the U.S. session, the market starts to flounder around into a range. What happens is, and what's happening right now is, right, coming out of Asia, you're seeing a lot of this, very disturbing, very concerning information about, containment, and then it's getting out of control, right? Other countries around Asia. So it's kind of, the fuse gets lit in Asia. We go down through Europe, obviously, right, through London. By the time we get to the U.S. session, we see a lot of these ranges right now. So ranges, expanding triangles. So most of these markets tonight, we're talking about a bear move down into these ranges. And what I want to do in a range is buy low and sell high, right? I want to buy off the low. I want to sell off the high. And we'll talk about, right, the best ways to kind of trade these ranges. Gold's a little bit different. Gold went up and then came back down. So we're going to save a special finish tonight's video over on the gold. So that's kind of what's happening. It's a lot of what's going on here on these markets tonight. And again, I'm running a little bit late here on the video, so I will try to keep this as short as I can get it without leaving you guys hanging there. So what do we know about oil? Speaking of gold, the black gold, the Texas tea. Well, first of all, we know the bears, right, have control. There's no question about that, right? Get a big gap down, we get that big roll lower, and then again, we go into the U.S. session, and what happens is nobody wants to sell down there, right? It's all oversold, right? Nobody wants to be the seller, left holding the bag down there, and the market kind of goes sideways. When the market makes a big pre-market move, what happens a lot of times is you see these big runs lower. Now pay attention, the U.S. session starts up, people read the headlines, and what happens around the opening bell, and a lot of times, right, big turning points, is they trade these breakouts, and they oftentimes reverse right back, right against them. These are very, very challenging environments if you're in the U.S. session. If you're in Europe, obviously you're getting there a lot earlier, but be aware if you get these big pre-market moves, you see this thing as one, right, two legs down, you're probably going to end up going sideways down here, and we're going to start looking for ways to buy low and sell high off those trading range levels, right? So we know we're bearish. We know we have, depending on how you measure it right now, a big leg down off that gap, right? The gap, of course, coming from last Friday's close. And if you tune in every evening on this newsletter, it's kind of getting funny at this point, because it's like, it's a Monday, there must be a gap over the weekend. And we talk about this, it seems like every Monday evening. No, I cannot use that gap as a reason to be a buyer. That is a foolish and basically unreliable way to be trading. Yes, almost every gap will get filled. Yes, we do anticipate them to get filled at some point. Maybe it's this week, maybe it's next week. Historically, a gap usually gets filled before the end of the day on Thursday. We mostly, over the last few weeks, have seen them be filled right about that Tuesday night, Wednesday session. But that is very difficult to predict ahead of time. We know the gap is there. If the buyers do take control, we'll look for that gap fill at 53.46 to be a pretty darn good target. But for right now, though, we've got to stick to the sell side. What is very interesting about this oil right now is you could look at this in a few different ways. You could say gap down is one leg, right? Next leg over, and there's your measured move right there. So we know right away it looks like sellers, right, took their profit on that bigger measured move. This morning, though, in the trade room, we saw it as 1, 2, 3, 4 legs down. And, we talk about this all the time. Anytime we see 4 legs in one direction, 1, 2, 3, 4, it's tough to go any further. Normally when a market goes 4 legs in one direction, it's usually not going very much further. And you can see those bears took some profit. So, the bottom line is we know we're bearish, but that profit taking off of, whether you want to call this 1, 2 legs down, right? Or you want to call it 1, 2, 3, 4 legs down. I'd be a little more inclined to call this 4 legs down. I widen this thing out though, just to make it simple for me to find that next level down there at 49.86. But that aside, though, you can definitely see what's happened here. We're very bearish. Then, of course, the bulls, right, get a gift because we assume profit taking off that measured move, right? Now, that strong move is the biggest variable on this chart right now. We know we're bearish. There's no doubt about that. But anytime I see a strong move in one direction, I've got to be thinking those bulls now have momentum to play with now, and they're going to try to run this thing running higher. And really at this point, I'm thinking we have a very strong move. Can I get these buyers to fail off that pullback and sell down into that range? It'll be a lot like that pattern back there, obviously much larger, right? But that same idea, right? Can we get these buyers to try to buy and fail and sell into those stops? That's a viable sell off the highs here. Or will those buyers be able to hold this thing and run it higher? And if that's the case, now all of a sudden that gap fill doesn't look so difficult to get, right? We'll mark up that high, mark up that hidden channel, and look to buy off the low of that hidden channel. So those are the two things that are on my radar right now, right? Looking to sell high, obviously in a bear market, but at the same time here though, right, keeping my eyes open here for a possible 1, 2, 3 reversal. So what are my what's the best setups here for tomorrow? Buy side, sell side. Again, if the market makes a move going higher here, I'm going to watch and see if these bulls fail and look to sell it back down into a range, literally selling it right into those stop losses, right? So if the buyers, if they can hold this, right? If the buyers can hold this right now, now we know where their stops are. And once I know where their stops are, now I know if they fail, I can now sell right into those stops, right? Think about it that way, right? We run up, the buyers start thinking we're going to reverse and go back to retest that gap here. It's not a bull market though. If I can catch those buyers buying that pullback and then sell into those stops, that'll be a pretty easy short going back down into that trading range, take some profit off at the low of day and try to leave that runner down to that big round number right around that measured move, right? That's a great setup here for us to the downside. But again, if they make a run going higher here, there's a couple things I'm watching for. One of them would be we run higher into a range. If we run higher into a range, I'll look for a seller failure pattern below that trading range, right? It'll be a bull market at that point. But if it goes sideways inside that range though, then we start looking for seller failure patterns to buy underneath the range, or maybe they just take off to the upside, right? Maybe it just shoots right higher here. In that case, mark up that high, mark up that low, and we're buying the pullback right off of that low. Now, sometimes that pullback never comes. I'll be very honest with you, right? When there's a short covering rally, when they pull the ripcord on this and the shoot hits and they go back to fill that gap, a lot of times what's going to happen is it's going to keep grinding and grind. It's not going to pull back for you. So if it doesn't look like it's pulling back, what I'll start to do is look for more aggressive entries using what I call a two-try trap pattern. And these are pretty simple patterns. Just want to make sure you see how I'm drawing this. They're higher highs and a trap low. So again, this is one of those setups where if you don't see it get a pullback, right? If it just keeps on grinding higher, I call that a two-try trap pattern. That'll really be a great setup for us to be a buyer. Again, our target being back to refill that gap. But again, I don't want to hear anybody saying, well, I bought here because I thought they were going to fill the gap. No, gap fills are only after momentum turns for the bulls, right? Remember, we don't just buy because we're at support. We don't just buy because there's a target overhead. We buy when the market is bullish and we're at support. We're not quite there just yet. Now, what if the market runs lower here, right? If we end up going back into that range right now, this is where things get a little more concerning, because obviously I don't want to be trading inside that range here. And it does look like we have enough confirmation. I've got bounce, 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 bounce. There's two bottoms, there's two tops. It's definitely a range there. So if we end up sinking back down into that trading range, what do we do now? What do you do with a range-bound market? You buy low and you sell high. How do I sell high? I sell high with a very simple seller failure into pullback combination. Seller failure, right? It's basically a breakout pullback pattern that fails, right? A lot like this one, right? So it's a seller failure into a bearish pullback. You're selling into buyer stop losses. Once the buyers fail, you're grabbing another one off the moving average as it runs back into that range. If we sit inside that range for a while, can I buy that low? Can I buy low? How do I buy it? What's the best way to buy if the market's very bearish? A nested failure. Instead of just simply buying into seller stop losses, I want to wait and try once and try twice. That'd be the right way, the more reliable way to buy off of that low. Does that make sense? Right? I can get aggressive at selling into buyer stop losses when I'm going with the overall momentum. Right? But if I'm trying to go against momentum, I've got to be a little bit more patient to really get the odds on my side more. Wait for the sellers in that case to try once, try twice. And we're literally we're buying simply right into those stop losses, right where the pain points are, right? As we always say. Now that's again, if the market goes sideways here. What if we take a nosedive here and make a run? If we make a run going lower, what's down here? Well, there's a lot of support here. There's a lot of support levels down here. In fact, you go back right earlier this year, late last year, there's a lot of stuff hanging out here around that. You know, you can see as low as that 49 half area, right? 49.58. So as we go lower, the odds are pretty good. If we make a run lower, we're going to go into another range down there, most likely. Now, there is a chance, obviously. We see more updates overnight from Asia, and everybody freaks out about the coronavirus again. If that's the case, right? If this thing does run lower, I've got all of that support down here. my big round number down here. So if we do make a run lower, right, what I would look for here is a range down here. I'm not too keen on selling that move because, again, you saw how many levels of support were there and how difficult it's been to break through those levels of support. But if I can get down to these lows here and I can start seeing a bit of a range down here, I then will start getting more aggressive. If they can hold down here, what I look for is that buyer failure pattern, right? If they can get that range to hold in, right? That's going to be the most reliable way for me to trade this thing as it goes lower, right? Don't try to predict the break lower by trying to get short off those aggressive little shallow pullbacks. Wait for those buyers to get a taste of a reversal. Wait for those buyers to try to buy it. They will, right? They'll try to get long off that low, right? They'll see previous bounces that worked. They'll try to buy off that low. And they might be successful, but the reality is the odds are much better here for us to be a seller off of that high. Again, I have no problem being a buyer down here, but I do want to make sure when I get down here, though, I'm at these levels of support, right? I definitely want to be at that measured move, and then I can start looking for, again, I'll sell it, but I'll only sell it until we see, right, that range develop, or can we break through that low and then find that hidden channel? If we can break to new lows here, I have no problem. Right, if we can go down, hold that pullback, and start seeing a nice big, right, jump off that moving average, I'm good to go at that point. I'll gladly grab that channel, right, find that hidden channel, and sell off the high of that hidden channel. I just don't think it's likely the way we've seen this thing bounce off that area before. So as we go lower here, how would I buy off that low? I want to get down to that measured move. What do? We wait for one. We wait for two, right? We wait for those bears to wrap that rope around their neck. Then we know we've got them right where we want them. Then we know we get the pain points, right above us. We can buy right into those stop losses as we run higher. All right, so that's a pretty good plan there setting up here for oil. Right now in the short term, do those buyers, right? Do they fail for a sell? Do they hold for a 1, 2, 3 breakout into a hidden channel pullback? You know, guys, tomorrow morning, we're going to trade all of this together every morning, 8 o'clock. We open up our trade room. If you're not with me tomorrow, the next best thing to really kind of get the most out of this video newsletter is to grab our free trading course. I'll put a link up here in the upper right-hand corner for you. And again, I'll put all the links that I'm talking about tonight in the description of the YouTube video. If you're on the blog right now, it's Sideways Markets. There's a big red or blue button right below the video tonight on the trading blog. So make sure you grab those and get registered for tomorrow morning's trade room. But again, if you're not with me on the trade room, make sure you grab that free trading course that has popped up in the upper right-hand corner. Get registered for the free trading classes. That way you can learn my 3-step strategy, my 4 favorite entry patterns, and you'll see a lot of examples of how we apply the setups I'm just simply talking about, but you'll see real examples of those setups on our favorite futures markets by following that link, getting registered for our free trading classes. All right, and again, all the links I'm talking about here are linked up in the description. How about some S&P right now? S&P is really the epitome of a pre-market move, right? When I see a very big pre-market move, I know that when I come in here, right, 9 o'clock, 9:30 for the U.S. Open, at this point, I mean, how many people are really going to want to be selling down here? There's a good chance we're going to go sideways right into a trading range. And so, like I said earlier, you really want to be careful when you see these big overnight moves. A lot of people got caught trying to trade that break down. You know, what happens is people get to they get to their desks 9:30 in the morning, opening bell on the NYSE. They're seeing bloodbath, right, on the headlines. And what do? They get in, they short the open, right? But you got to look at the big picture. Where are we, right? We're already 1, 2, right? It's very difficult to make money short in the open when the market has already gone down 40, 50, 60 handles before the opening bell, right? So be aware of that. I don't care what the headline say at the opening bell, right? If we've gone 3, 4, 5 legs down, or in this case, right, big gap down here. You can be very careful, and that's what happened this morning on the S&P, right? They overdid it, trying to go lower at the opening bell and got kicked back against them. Now, it doesn't mean it can't keep going lower from there, but you look, every time they try to go lower here, be very careful selling those lows right now. They're popping right back up. People are not going to want to sell low when you get those big pre-market moves. So what do? You wait to fade the pop. You wait to fade the pop, right? You fade it, right, as it's going higher. Remember, successful traders, when they see a big pre-market move, right, again, when they see a big pre-market move down, they're now thinking, give me something up here, right? Give me something a third of the way, right? Half the way back here. They're not going to try to mess around with these small little pullbacks right here, right? Rookies are going to make their mistakes by trading short down there, right? Not after that big move down. What better off is wait for that profit-taking rally, wait for those buyers to get caught now, and you'll get a much better result by selling high, right? Especially when you get those big pre-market moves. That's the one thing I want to kind of point out, right? When you get those big pre-market moves in the overnight, don't chase after them. Wait for the pop and sell into it. Wait for the pop and sell into it. Now, what do we know about the S&P right now? We know we're bearish. That's pretty darn easy to see here. We also can see, just like on oil, right? You could easily call this one leg, two leg, three leg, 4 legs down, right? Now that, of course, incorporates the gap, but I mean, in the trading this morning, we saw 1 leg, 2 leg, 3 leg, 4 leg. I mean, a market goes 4 legs down before 10 a.m. It's probably not going to go much further than that, right? People are going to reject the idea of selling new lower lows. That's exactly what happened today on the S&P. And again, I'm not saying it can't go lower. It's just, the odds are not in your favor if you're selling new lower lows, right, after a big pre-market move that puts you 3.5, 4 legs down. So we know we're bearish. We know the market is most likely right now inside of a range, right? They've got there again 1, 2, 3 leg, right, triple measured move. I'm anticipating some range down here, and I think that a pretty good fit there for that trading range. I got double bottoms, I've got double tops to help me find the range. Once I find the range, I use that range for my sell zones, to find my buy zones, and of course, anytime I have a trading range, I'm always looking for those expanding triangles, right? Expanding triangles are really my best friend in a range-bound market. Now, these are a little bit harder to find today. I got expanding triangles off the highs there. Those fit really well. Bounce, 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 bounce. The one thing I'm kind of questioning right now is this one right there. This might be the sleeper for tomorrow. Bounce, bounce. I would have liked it a lot better if it would have bounced right there too. If I would have got a bounce right there, this would make it almost a guaranteed, right, expanding trend line there. So those are some really important levels of support and resistance that we're watching here for tomorrow. So we know we're bearish. We know we are, 4 big legs down. We also know that it looks like we're into a trading range here. What does a range tell me to do? Ranges tell me to buy low, sell high, right, and avoid the middle. So I'm going to stay away from the middle of this thing, right? Stay away from that middle. That's the no trade zone. I want to sell it high. I want to buy it low, and we'll keep an eye out for breakouts. So what if we go sideways here? If we sit right in the middle, we do nothing, right? We do nothing. If we sit here inside the range, we sit on hands until what? Until a breakout. Well, until a potential breakout. And what I do whenever I'm in a range or I'm 4 legs down, I expect to get a profit-taking rally. Once that profit-taking rally pulls back, I expect counter trend, mostly rookies, right? But I'm sure there are some experienced traders out there that make mistakes every once in a while, right? Counter trend rookies to try buying that pullback, and we're just simply selling right into it. This is the same idea we'll look for here tomorrow, right? So if we end up in a range here, eventually those bears will run out of bullets and the market will poke its head higher here. Now, when it does, I get a lot of resistance I'm watching overhead here. If it does poke its head higher here, you're looking for really a buyer failure is what I call it, right? A failure pattern, a buyer failure. And again, you're simply selling right into those buyer stop losses into a bearish pullback, right? It's a buyer failure into a seller pullback pattern as we go lower. Now, that, of course, if the market goes higher here, right? If we go lower on this, so if we end up sitting inside of this range for a while, right? And then we make a run going lower. Can I buy low? I can, but I got to be careful, right? Because it's a bear market after all. And I don't care the fact that we're at support down. It doesn't matter to me. If we're bearish, I really got to be careful being a buyer. I don't care what level of support I have. And the best way to buy in a bear market is that nested failure, right? That's the one where we wait for one, we wait for two, absolutely. Then we can buy up from there. Now, I'm just simply drawing on the chart right now. We'll cover all of those patterns in a lot more detail, right, in our video classes, and we'll do it tomorrow in our trade room. Again, all the links will be for you in the description of the YouTube video or right below the video tonight on the trading blog, and that link for the free course is in the upper right-hand corner, right? So now, market opening up here in Asia right now. If we do run lower, right, I can buy off this low, right, with that nested failure. What if we run higher here now, right? What if we run higher? What if we don't sit inside this range? If we make a run higher here right now, let's say we see a real strong move up, right? We don't mess around with the range here. We see a real strong move going higher, right? Could I still sell that? I can. You know, in all reality here, this may be setting up here for what would just kind of be a big spike in channel, right? So this might be a spike in channel here, which would put the sell zone right up around there. So the moral of the story is if we do get a run on this market, right? If they do make a strong run here, right, in this kind of pre-market here right now, I can still sell up here, but I have to wait now for that nested failure because that momentum will be too much. Yes, if I get a move up, right, inside my sell zone here, if I get a move, right, if I get a move up here, right, yes, that's a buyer failure into seller pullback waiting to happen. But if this thing keeps on running, you know what I mean? If it keeps on running up into those highs here, I'm going to want to wait for the one, the two, and then sell it back down again, right? So we want to wait for that nested failure, as I call it, to sell off that high. And again, if it makes strong run up, if they can hold that pullback, just like on oil, if they can hold that pullback and make a run higher here, great, good for them. That's a bull breakout. That's a 1, 2, 3 breakout. What do we do with that? We mark up the high. We don't chase after it. We wait for a pullback to support. Find that low. The key here is find that major low. That major low is going to give you that hidden channel, and that hidden channel is where the good stuff happens. This is a very reliable setup. It's a 1, 2, 3 reversal into a hidden channel pullback. One of my favorite ways to trade reversals. And again, if for some reason that market doesn't pull back and it keeps on grinding and grinding and grinding, right? Now, why would that happen? Well, because all the bears, right, who are convinced this is the one, right? We've heard this is the one the past 3 Monday nights, by the way. All these experts calling this bear market. Sure, this could be the one. I don't know, right? I didn't know last week. I didn't know week before that. We don't get paid to know. It doesn't matter, right? It doesn't matter. All that matters is we know we're bearish. We're sitting right on those lows. Don't sell down here. Right? If it runs and runs higher, hey, it's now a bull market. We'll now structure the trade to be a buyer from there. So if we do get this thing to rip higher here and it won't pull back on us, right? Most of the time, right, it'll run up, it'll pull back, it'll jump and hold, and you'll be able to find that channel pretty easily, right, to buy that pullback. But if it runs and keeps on running and running and running, what's the best pattern? That 2-try trap pattern will always be my favorite, right, to buy that little trap low. And again, it'll be a higher high. That's the key, the higher high and that trap low. Now, sometimes we see this thing run and run and run, and we can use simply a 1, 2, but I always like to get that trap low. That trap low is really gives you a lot more of an edge because you're buying as low as you can. So there's some good steps to watch there, right, as we go higher, right? So keep an eye on that. Really, right now on the oil, it's on the S&P, it's all about, do we sit inside this range, right? 1, 2, failure back down, right? Do we sit inside that range, run lower, 2, try nested, or does this thing reverse here, right? Strong move up, 1, 2, sell back down, or 1, 2, 3 reversal off the moving average, mark the high, mark the low, and we're buying off the low of that hidden channel. Only time will tell right now. I'll be with you guys as always tomorrow morning in our trade room. And again, as we go lower here, be very careful as we run lower. So how would we trade it going lower here, right? What would the plan be if it goes lower? Strong move down, they got to hold that pullback, right, and then jump off the moving average. Right? That's the only way I can take this thing short going lower. I'm not going to sell that pullback. I'm going to mark that low. I'm going to mark that high, and I'll sell the next pullback. Right? What is that called? It's a 1, 2, 3 breakout this time, right, of the range. It's a 1, 2, 3 breakout. I'm not selling the first pullback. That first pullback's not reliable enough. A lot of times that first pullback, 1, 2, and whoop, right back up into that trading range. You want to wait for that actual confirmation and then sell from there. Where's our target going to the downside? Got a nice big juicy target down there around 3160 is the next big area of support on this S&P. For now, though, we're going to see if these buyers can hold this thing right through Asia, and maybe we'll see this thing right back to fill that gap here tomorrow. Is it the end of the bull market? I don't know. A lot of experts keep telling me it is right now. I'll let the charts tell me here tomorrow. Next up here, over on the Nasdaq. Nasdaq, very similar here to the S&P 500, as you can see. We've definitely got a bear market running lower. We can easily see now some higher lows, some lower highs. And like I said, whenever we have a big pre-market move like this, I'm anticipating there's going to be some sort of range. Once I have my range nailed down, I can sell high, I can buy low by using breakout failures, right? Fade the breakouts, as we call it, right? So big pre-market move there. And again, like I said, in the S&P, right, you got that gap, right? The big gap. And again, no, I'm going to sound like a broken record here right now, but gaps are not enough for me to want to buy this market right now. Yes, I know the gaps will get filled. Yes, I know the odds are very likely they do get filled, but we don't know when. You know, statistically, it'll be sometime before the end of the day on Thursday. Maybe it's tomorrow. Maybe it's the following day. It doesn't matter. All that matters is, can these buyers get off the lows here? Can they hold a pullback? Because so far today, they have not been able to hold that pullback yet, right? Every time they've gone up, they've failed. And so we can't just say, well, we've gone so far, we might as well buy now. We can't do it that way, right? If you say that, you're going to lose money in the long run. You might get lucky every once in a while, but it's tough to get lucky every day as a trader. So we got to get up off the low, the buyers hold, then we can start thinking about filling that gap. I don't want to get too aggressive on buying in these strong bear markets. Now, again, you'll notice we are, gap down, one leg, two leg, three leg. They barely missed that third leg. Maybe you call this 1, 2, 3, 4, right? It's tough to tell here on the Nasdaq exactly what they want to use. These emotional markets like these around, anytime we see these big headlines overnight, right? These are emotional markets, and sometimes they won't behave the way they really should, right? Or the way they normally do. Nothing really should do anything, right? We are the ones that place those restrictions on the markets. But you can definitely see, though, we're 3 legs down, 3 big legs. I would anticipate, right? We've got our range here drawn in. So I want to be a seller. I'm looking for levels of resistance. You'll notice here I've got my range marked up here. That range gives me levels of resistance above. It gives me support levels below. I also like how we can use that triangle trend line there, up around those highs. There are definitely levels of resistance there overhead to be taken seriously, courtesy of kind of like this little hidden channel, if you will, right? Maybe it's called a bear flag in your eyes, whatever you want to call it. Looking for a sell right off the top of that, right, of that channel. The most important thing I think we see on this chart right now, though, is the triangle. And triangles always tell us to focus on the edges. Right? Focus on the edges. These are usually where the best entries and exits will be. Stay out of the middle and focus on the edges. So really, you could simplify this chart right now and say mark a level there, mark a level there, mark a level there, mark one there, and mark one there. And your job here is to sell up to levels above, right, and buy at those levels below. Now that sounds pretty easy, so how do we do that? Well, it all depends on momentum, right? Momentum is a really big part of this. So how do we sell high, right? How do we buy low? What if we go higher here first, right? If we go higher right now, what I really want to kind of ask myself is it a relatively, for example, we got the first level up here, right? We go up. The buyers, of course, say, we're going to fill the gap. See, I told you. And the buyers come in. They try to buy that pullback. those poor buyers, they're not on the right side of the odds right now. The odds are much more likely those buyers fail, and I'm going to sell into those buyers' stop losses using a failure pattern. But let's say the buyers get a little more than we think they have in the gas tank, right? Let's say they really make a run higher here now, all the way up into those big levels overhead. Do I still want to sell? I do. I still want to sell until they hold that pullback and run, right? So what I'll do in this situation, though, is anticipating a little more bullishness now, right? Kind of the wind at their back for those buyers. The buyers are probably not going to give up, let a fight here. We'll let them try once, let them try twice, and then we can sell into those stops. Now, be aware, a lot of times we get these big, I call them nested failures, right, where the buyers pull back once, they try twice here. What happens a lot when those nesteds fail, when the buyers try twice and fail, is you get these strong moves down. You don't want to chase after them as they go. You want to wait for that pullback, right? Wait for that pullback. So, if you happen to miss the failure, don't chase after it. It will almost always pull back here for you, right? Now, what might happen is it may make a run up. We may get the 1, the 2, it may collapse back down in, go sideways again, and then poke its head out one more time for you, right? And there's your shot now to sell it again, right? There's a nested failure, just your standard failure pattern off the highs. And again, right, I'm just simply drawing these up right now. Grab that free course. You'll see hundreds of examples of different types of failure. I love failure patterns, especially in these rangy markets right now, allowing you to buy low, sell high. So we know what the plan here is. If the market goes higher to sell, if we go higher, right, 1, 2, 3, make sure we get that strong jump off the moving average. Then I'll mark up that high. I'll mark up that low, right? Remember, we don't draw the channel the typical way. We draw it a little bit more creatively off that big low, and that's where the magic happens. That's where the big deep pullback comes in, right? This is usually just below the moving average. And if you were to zoom in on that area right there, right? A lot of times this will be a classic seller failure into a bullish pullback, right? So if you kind of put a magnifying glass on that area, right? It's a seller failure, right? Bears try to sell, seller failure into bullish pullback as we go. Think about that, right? In that pullback area on a faster time frame, right? All zoomed in. Or, right, like I mentioned before, if the market keeps running and running and running and running, won't pull back here for us, I'm looking for that 2-try trap. Right, it's a higher high in price along with that trap low. Remember, at that point now, once this thing won't pull back, everybody's going to start, foaming at the mouth trying to get into this thing, and anything they can get for a trap low is almost a bulletproof trade at that point. Remember, if this thing just grinds higher, people are going to see the writing on the wall, right? The bears are going to get out. The bulls are going to want to get in before we go back and refill that gap. And so if it just kind of grinds and grinds and grinds, look for that 1, that 2, that trap and go. Higher high in price, trap low. It usually comes right below the moving average, right? And again, you'll see a lot of examples of these inside that free trading course. Or, right, as always, right, we'll do it together tomorrow. Doing it with me is the easiest way to do this, because that way you can look over my shoulder and make sure you're doing it the right way, right? All the links for that trade room access as a client is linked up in the description of this YouTube video. All right, we're looking good there. So now we got a good plan if we go higher here. If we go sideways, not a lot changes, right? Same idea. We're bearish, so it's going to be a buyer failure to sell off the high. It'll be a nested failure, right? A nested failure to buy off the low. What's the difference? The difference is, to sell off the high, I just have to get the buyers to buy that pullback, and I can sell into their stops, right? It'll look a lot like this, or like that, or like that, right? Every time it pulls up, pulls back right now. As we go lower, though, for me to buy in a bear market, I now need to give those bears the benefit of the doubt. I wait for them to try a couple times now before I go trying to be a buyer back up into that range. Now, what if we go lower here? If we go lower, it's really important to think about where we are right now, right? There's a lot of levels down. The next big level, though, I got to worry about is that 8,800. 8,800 is really the next kind of big area of key support. So if we can get this market to break down here for us. And again, like I said, market goes this far in one session. The following day is probably going to be range bound. So we make a run lower. I'm looking for that 1, that 2, and then back up in because of the range. But if they can hold that pullback and make a run for it, all right, now you've got my attention, bears. Now I can mark that low, mark up that high. The easiest way, the most reliable way, it may not be the easiest, it's the most reliable, is to wait for that, again, I call it a 1, 2, 3 breakout, and wait to sell off top of that channel. If it runs lower and won't stop, right, doesn't pull back at all, 1, 2, trap and go. A 2-try trap pattern is my favorite pattern when a market won't pull back for me, right? When it won't pull back. And again, you'll see this quite a bit in real strong moves. But right now, though, we got to wait for more information here on this Nasdaq. So I think we're pretty good here on the Nasdaq, right? Focus on the edges, buy low, sell high, and don't do it alone tomorrow, right? Come out and join me tomorrow, and we'll do it together in the trade room. All right, gold. I saved the best for last. Yellow metal. What do we got here? What's gold telling us right now? We know we're bearish, right? We know we're bearish. We know we had a very big run up. We know that whenever the market is this bullish in the pre-market, what's going to happen? We're going to start going sideways, right? People are not going to want to buy this high, and you can see what happened right away. Buyers tried to buy once. Buyers tried to buy twice, right? This is just like a nested, right? Buyers try once, buyers try twice, and where do you think those stops are? They're right below that low, right there. Everybody, you could tell, everybody was betting the farm on this thing running higher. And when they got stopped out, boy, they got smoked, right? You can see it right there. So big, strong move up, right? Buyers try once, buyers try twice. Where's their stops? They're right below the low. All that is a nested failure. That's all it is. That's all it is, right? It's just the buyers trying a couple times. They try once, they try twice. Now we know where their pain points are, right? And you're selling into those stop losses. Now, if only now we could make money by trading in hindsight, right? It doesn't work that way. So what's my plan for tomorrow? We know we're bearish. Where do we think these bears are trying to go? Take a guess. El Gapo, right? Yes, the gap is probably where those bears are trying to go here for tomorrow. We would expect to see that gap filled. Now, if you've been watching these gaps for the past few weeks, a lot of times those gaps get filled and they rip right higher again, right? Because think about it, right? You come into the U.S. session this morning, you don't want to trade up here, right? It's way too high, right? So once it comes back to fill the gap, yes, now we'll buy in there. So I wouldn't be surprised if we see the gap fill and then a rip back up into that trading range. And that, I think, is kind of the one thing we're kind of waiting on right now here on the gold. We know we're bearish. I want to be a seller, obviously, in a bear market. It looks like I can take those lows and mark those highs, and it looks like I can use that high here. The one thing I'm wondering here, is this a range? Is this a expanding triangle? You know my love affair with, right, expanding triangles, right? I love those because they give me a chance to buy low and sell high in range markets, right? So is that the range here? You know, that's kind of the variable we have right now, right? We know the market has double bottoms here. Will it sit and go sideways? If that's the case, now we can look for seller failures and sell off the high. That would be really nice, right? Because then you'd have a bunch of levels of resistance up here. Just wait for that breakout, wait for those buyers to fail and just sell it right into those stop losses. Or do we keep running lower? And if we keep running lower, now this becomes kind of like a spike in channel. And at that point now the base of that channel becomes a real valuable area. And now we look for basically the same idea, right? It's a buyer failure into a seller pullback off the high of that channel. Those are the two scenarios that I'm definitely looking for here right now. So let's kind of think about that a little bit deeper here. I've got the range drawn out to the best of my knowledge right now. This may be adjusted here in the next few hours if you're in Asia. So we'll prep again right tomorrow morning when we get back to our desk for the trading session. So if we sit inside the range here, right? If we sit inside the range for a while, I know I can sell. I don't really need that trend line overhead, but it certainly won't hurt. I can sell that buyer failure pattern, right, into, right, that basically that buyer failure back into that range, right? That's pretty easy. We talked about that quite a bit here tonight on this video. If those buyers can hold that pullback, right, then what happens? Then we mark it up the high, right? The lows. There's my new channel, and we're buying off the low of that channel. It's all making sense, right? It's the same stuff. We apply the same basic recipe to every market. It's just every chart is a little bit of a puzzle, right? You got to figure out, okay, who has control? Where's my levels? Do we have any chart patterns to work with? Things like that. And we do that together every day in our trade room, which is why our clients quickly progress so fast, because we're doing it together every day. Repetition is what really makes for success in day trading. So we know that's a good chance there for that pullback there, or maybe it doesn't pull back, right? Maybe it grinds. If it grinds higher here, what's the problem, right? We're not getting a pullback. What do? Two-try trap, right? So if it grinds higher here and we don't get it, right? What is it? It's a two-try trap, right? Grinding higher, two-try trap. Again, usually moving average just below that low. Target is back up to retest those highs. You can see what's happening right now, right? Strong move down, lower low. What do you think's going on? Two-try trap, right? That's all that is. That's all those bears are doing. That's a two-try trap right there, right? Lower low, hit it, right? Usually just about that moving average. This obviously is end of the day, so you wouldn't be trading that one. But it's a good example of exactly the pattern that I'm talking about. So we know as the market goes sideways, if it pops higher, we know how to trade it as it goes higher here. If we go sideways here, very important here now, if we go sideways here and then we poke our heads below the range now what you want to look for, again, I can buy underneath a range as long as I have what? A 1, a 2, yes, nested 2-try, right? Doesn't need to be drastic. It's just when we get the pullback, wait for the 1, wait for the 2, and just buy right into those stop losses. Now this is if the market goes range bound. If we keep running lower here, this will not be a range. What's the best way to buy it now? This is very, very important. If it doesn't go sideways, remember, if this thing goes sideways, it absorbs a lot of that bearish kind of hustle to it, right? If it keeps running lower though, there's no sign of buyers in sight, right? There's no balance at all. So how do we buy in a very strong bear market? Yeah, I realize we get the gap down there. I don't want to hear buy the gap. That's an unreliable way to trade. We know the gap is there. Yes, we can use it as support, but we don't just buy in a bear market at support, right? That's not how trading works. It can work that way, just not very often. And the problem is, if you make money getting aggressive buying those lows, right, you might make money today, but you'll give it back tomorrow, Wednesday, Thursday. The strategy that the aggressive trades that make you money one day, those same aggressive trades give back more than what you made the following days that week. Stick to the most reliable stuff. What's the most reliable way to buy into a bear trend? Not a range. Remember, oil, range, S&P, Nasdaq, range, gold, maybe not. Remember, that's the big variable here. What's the best pattern? It's very similar to a nested, but it's called a crown reversal, right? It's called a crown reversal. A crown reversal, you'll notice, has one very distinct difference, and that is a trap low, right? It's a big deal. It's a big deal. Okay, you want to wait for that crown reversal because then that's going to give you now the ability to sneak your order in before you get back up into these highs. You don't want to buy high. You want to be in that move already before it goes back up to retest that high there. Got to get that trap low. At the very least, double bottom. At the very least, it's 1, it's 2, double bottom. At the very least, right? The very least. Again, in a bear market like that, right? Again, not a range. In a bear market, you want to be buying as low as you can off support. You don't want to wait and be buying it up here. Okay, now you're back buying high and you don't want to get in that trap. Now, what if we just V-bottom off that low, right? It could happen. What if we V-bottom off that low? What if we make a run here and the market kind of runs and V-bottoms? What I'll do is I'll look for a little tiny micro 2-try trap, right? This has been a much faster time frame, obviously. So if we see this thing literally boing, right, bounce off that low, you know what I mean, right? It'll run, it'll aggressively reject that low. I'm not going to chase after it. You don't want to buy high again. You want to buy at support, buy low, right? Wait for that 2-try trap coming off that low. And at that point now, you might get a good pendulum swing now all the way back up into this area, that 1675, right, 1680 area. Now, like I mentioned earlier, as the market runs lower here, if it gets stuck down here, Okay, keep your eyes open for a range down here. If it sits and sits and sits, now what we'll do is we'll treat it as a bear market, still the range. We look for a new range here, and we're selling with that classic buyer failure setup up above the top of that trading range. Does that make sense? Right? So if this thing runs lower, again, I'm anticipating a range here, but if it runs lower, fills the gap, and goes sideways down here, remember, the longer we sit and go sideways, the more people are trading there, the more likely it is to go up and come right back down to the same spot. We wait for it to go up, wait for those buyers to foolishly think the gap's been filled, wait for them to buy the pullback, right? And we'll sell into those stop losses. If they do hold the pullback, right, and they run it higher, good for them. Mark up the highs, mark up the lows. I'm not going to predict that reversal. Right? I'm not going to be the gambler trying to predict that reversal. I will get aggressive though on that next pullback, right? Because that's the pullback I know I can put the kids through college with. I know I can pay off the mortgage with. I know those setups, right, are very, very reliable. I can't say the same thing, right, on that first pullback. Okay? That's the difference. You know, you don't want to have to close your eyes and just let's give it a try. You don't want to take that to a trade, right? You want to trade. You've seen time and time and time again. You know you can, pardon the term, you know you can take it to the bank, right? Those are the setups I'm waiting for tomorrow. And again, tomorrow morning, 8 o'clock Eastern time, I want to see you there with me. The easiest way to get registered for tomorrow morning's trading session is to join our membership by using the links in the description of this YouTube video. I'll put all the links below the video tonight in the description. If you're on the blog, there's a big red button for the free course. There's a big blue button to join the trade room tomorrow as a member. Grab those links below the video tonight. Get registered. If I don't see you tomorrow morning in the trade room, please make sure you grab that free course as part of our free trial. You'll get an invite to our trade room. You'll learn the 3-step strategy, learn all my favorite entry setups, hundreds of examples of how we trade them on our favorite futures markets. You'll love that free course, right? So if membership isn't quite right for you right now, not to worry. Grab the free course. Get the knowledge you need. At the very least, you can make the most of our time together every evening on this video. Tonight, don't forget, don't be afraid to call that toll-free phone number. Don't let my ugly mug scare you away. Call that toll-free phone number. I'd be more than happy to walk you through the entire process tonight of getting ready for tomorrow. And as always, that live support tool will work in the lower right-hand corner as well. So don't be a stranger. Keep in touch. Thank you so much for tuning in. I know this video is a little bit late here for you guys tonight, so I apologize on that. Great to be back here with you all tonight on this video. We're coming back here with the final week of the month here. I'll be back tomorrow morning, obviously, in the trade room. Tomorrow night, we'll do the newsletter again tomorrow night. Get ready for Wednesday's trading session. I'll see you guys tomorrow night, if not tomorrow morning, in the trade room. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.